Good morning, ladies and gentlemen. Today is April 28th, 2021, and I'm back with another Wednesday edition of the live show. Today is Fed announcement day, so it's going to be an interesting day. So there's a Fed announcement at 2 o'clock, and then, of course, Powell will give his questions and answers afterwards. And typically on a Fed day, things get kind of dull before that happens. Usually there's a little bit of action. There's been some action this morning. Market pulled back a little bit and then rallied and pushing up against really close to 4,200, which seems to be the level to beat right now. We'll take a look at that in a second. And so what else is going on? I think tonight, at some point tonight, I've seen in the news that Biden has given a speech about some new act that he wants to enact, speech before Congress, and I guess they're going to televise that. So interesting things going on. The Dow, the Dow's down 138. So we're right in the thick of earnings season too. So all kinds of stuff happening. Although I'll be honest with you, the market has been relatively dull on sort of an intraday basis for the last few days here. So what's really crazy about this? So there's last Wednesday when when I sat here and said that, boy, I'd be surprised to see the market hit a high, and then of course a couple of volatile days there. Last Wednesday, Thursday, and Friday were actually fairly long range days, I suppose, compared to a lot of what we've seen lately. But anyhow, so you had this little sort of topping pattern, found support right there, and last Wednesday, big up day. It seems like when the market starts moving in one direction, that it kind of feeds on itself in that direction. And so anyway, but check this out. Look at 4,200 up here, right? It seems like it seemed like sort of a gimme the past few days here, and even today. As I'm sitting here, I'm watching a 5-minute chart, and it's getting really close. So it's going to be interesting to see how the market reacts to whatever Powell has to say today. I think everybody's concerned that at some point they're going to announce tapering bond purchases, and so that'll be the next big thing. And geez, that reminds me of so long ago, Bernanke tapering QE. What year was that? I don't even know, but I hadn't heard the word tapering in very a lot of years. But anyway, so yeah, look at these last few days here. I would imagine that today is going to end up having a pretty decent range. And so depending on how the market reacts to whatever Powell has to say, we're either going to rip through 48,200 to a new high, or we're going to end up back down here at the lower end of the range. And it is quite the range. There was this rally from towards the end of March to mid-April here. And then ever since then, it's just kind of stalled out. The volume's gotten kind of low. We're seeing summertime volume early in the year here. And so it makes me wonder whether nobody wants to buy or sell. Like it's tough to want to commit up here instead of waiting for a pullback, but it's like nobody wants to sell, and so the market just kind of is extended from this 50 day, which is kind of my reference point right now. 50-day moving average here. Um, you've had a few pullbacks to it. Each time that it's gotten like super extended from it, there's some other moving averages too that the market's extended from. So look at this. Well, actually, you can't see it. Hang on, let me pull it on the screen here. The RSI got the RSI got overbought, right? See that RSI got over 70 here, and we had the few little down days there, and so it kind of worked over being overbought, and here it is like right back at the highs. Yeah, the past 2 days have just been sort of nothing, which makes me wonder what's going on. So anyway, when the range contracts for a period of time, then it typically precedes an expansion of the range. But yeah, this has been sort of a relentless ever since the pandemic low way back here. There's the pandemic low. It's been a relentless march higher, and other than the market like just looking like it's kind of extended from. I gotta figure. I looked at these stock charts right here. Don't have a linear regression line, but that's one of the cool things I like to put on my charts sometimes. Is take a linear regression line from somewhere back here, probably beginning of April, and it would intersect. The idea of the linear regression is that it would intersect like right through the middle of all this price action. It would probably be here. And so the price tends to oscillate above and below the linear regression line. I could actually do that on my other chart, but anyhow, so there you go. Market is pushed right up against 4,200, and today could easily be the day where we push through it. It just depends on we could push through it. I mean, it's just quite honestly, we're so close that random price fluctuation, just a little bit of buying pressure, which we've already seen this morning, could put it to 4,200. So, but you never know on a Fed day. Fed day you could push a little bit higher and then reverse, or we could hit a new. We're actually at the new highs right now, and so we could end up putting on another big long range day and make it even more extended, right? So who knows? But um, let's see. We'll look at the Qs real quick here. The Qs took a pretty decent dip back in March and then rallied. And then the funny thing is that it seems like the rallies happen really fast sometimes, right? Just a few days here, literally like 4 or 5 days here, took it from being down in dip territory all the way back to the highs. And so it's doing the same thing. It's just the Nasdaq's just sort of consolidating up here right around the highs. Russell 2000. Russell 2000's got kind of a strange pattern going. It's kind of head and shoulders looking with this little head part of it here. And so you can see how yesterday it was like, I guess like 230 or whatever. And I'm not sure what the symbols are. I need to figure out the symbols so that I can remember them in my head for the actual Russell and the Nasdaq and the Dow. But looking at the ETFs basically gives you about the same thing. So there's the Dow, the DIA. You can see the symbol on these up here. Same sort of thing. Dow's a little bit extended. It's kind of been chopping sideways here. I'm not sure what's bringing. I guess maybe Boeing or something. I think Boeing was down a few bucks, bringing the Dow down a little bit today. So the Dow hit a new high back over here and is kind of consolidating that a little bit extended from this 50-day moving average. Google beat Microsoft. I thought Microsoft seemed like they beat earnings, but it's down. It's down a little bit this morning. So yeah, right in the thick of earnings season. Speaking of which, let me switch gears here. Into the open trades, and this MOH right here. This MOH is going to release earnings after the bell, and so it gets closed today. Right, there's the earnings. So basically, let me try this again because not really seeing any price movement here. But anyway, the way that we do it is we don't hold any stocks over earnings, right? You guys know that. And so when they release after the bell, basically what we do is we will close the position using today's open. So it looks like there was a little bit of gap up at the open there. So anyway, this worked out pretty well. This was a decent, and plus this is the longest running open trade that we have in the swing trades here. And this thing has been open since back over here, February 12th. So you can see the entry right there. Um, yeah, and so I mean since February 12th this has been open, and you can see how it triggered in over here. Triggered in over here and then kind of bounced around a little bit and spent a lot of time going sideways over here. And so you can see the progression of the trailing stop, which is basically moved up along with it. And as of the last few updates here over about the past week or so, this trailing stop's just been kind of hanging back up here. There was the target, so made it to the target pretty quick, and then spent a lot of time before it actually sort of took the next leg up. So as of the close, let me find this on my other screen here, the percentages. There we go. As of the close yesterday, thing was up 18% roughly, and so another percent on the gap up this morning. So yeah, this is gonna end up being a good one, and actually make up for a couple of those stops that we took when the market had a little bit of a fit last week. So MOH, and by the way, on the home page of on the very home page of the members area, you'll see that there's a little spot there for any stocks that are getting closed today ahead of earnings. That gives you a little bit of a heads up, and so that gets updated like the night before on the update. Whenever the update runs, and so to look at that in the morning, and then you'll see if anything's getting closed, because we are in the thick of earnings season. A couple of these other open positions are going to get closed, within the next week or so. So I might as well work my way up from the bottom here. So there you go. MOH. You can see that it actually February 11th was the trigger date, but February 12th was the morning here where I've got that little circle there where it triggered in. So yeah, looking pretty good there. It's actually having a little bit of a rally here this morning, kind of popping up. So let's see. Let me work my way up the list. Next up, we have PayPal, and PayPal looking pretty good. I drew this last week. PayPal is up about 9% as of the close yesterday, and it's up a couple of percent this morning already. So let me zoom out on this a little bit, or actually zoom in. Yeah, so you can see it triggered in right here. What was the date on that? On 4/1. And nice little run up here to basically ran straight to the target. And then this zone I have drawn up here, that's just a big sort of resistance zone is why that's up there. Nothing in particular. I think I pointed out last week or the week before that was in order to really get something going to the upside and get close to back up to these highs here, it's going to need to break through this zone. And it's looking so far so good. I mean, the idea is that it ran through the target, then it pulled back a little bit, and so this trailing stop here has just sort of been hanging back and didn't get tagged, even though it looks like it came back down. And so that's part of what the system is designed to do, is to have that trailing stop hang back just far enough to allow for normal price fluctuation and normal little pullbacks, little dips in a particular stock. So if you keep your stop too close, then you get knocked out, and then you turn around a few days later and it just pulled back a little bit and then turned back up. And so yeah, that was actually a pretty good stop. That stop was probably somewhere over here when it pushed through around the target is probably where that started. So it's hard to actually tell because when I draw these things on here, it's a little finicky about, you know, sometimes it moves this and that. So, but anyway, there you go. PayPal looking pretty darn good, quite frankly. You got kind of like a cup and handle pattern here on the way back up, and so depending on what the overall market does, it wouldn't surprise me to see PayPal like cup all the way back up towards the highs there. So, but real quick, let's take a look. I'm looking on my other screen here. PayPal earnings on 5/5 after the close. So here's how much time we have left here on PayPal because this is going to get closed on May 5th here. Verify that. Earnings on 5/5 after market close. Okay, perfect. So there you go. So that means there's today, and then there's 1, 2, 3, 4. So there's only 4 more trading days here. Um, here's the thing. Holding over earnings, as we always say, is sort of a crapshoot. You don't know how the stock's going to react. And so the idea is that not holding over earnings is that way you know exactly it's kind of a plan. Now here's the thing: if you're holding the stock long term, obviously you're going to hold over earnings. But for the purposes of swing trading, it's also a way that sort of like that MOH. It sort of cleanses the system and resets everything. Just closing the stock ahead of earnings. So we've all seen stocks that they release earnings and then they're up huge after the bell, and then there's the conference call, and then they go the other direction, and then by the following morning, they can gap up significantly or gap down significantly, and there's just basically there's no edge to it, I should say. So, if you had 10 stocks that all were coming out with earnings or whatever and you held them all, my guess is you're going to have some that, that are disasters and some that have big gap ups or whatever. And so, maybe it would work out, but for the purposes of what we're doing here, we just close them and lock it in. So, on May 5th, PayPal will get closed at the open price ahead of earnings. So, so far so good. Looking pretty good here. As of the close yesterday, like I said, it was up 9%. So, add a couple more percent to that today. Excuse me, looking pretty good. Next up, this one's hilarious. You guys remember me saying that this JO here, remember me saying how I didn't like it and so that it would probably work out? Jeffrey he said something to me about that last night. Yeah, of course, this is the way that it goes, And I mentioned to him, I said, well, this thing is kind of below the average volume's kind of below what we normally consider the cutoff. Like if it was an individual stock, it wouldn't be in here because the volume's so low. And the last couple of times, it's just been very choppy. Last couple of times it showed up on the list, it hit the stop instead of the target. And so that's why I was hesitant. And of course, that's why I figured this will probably be the time that it works out. And sure enough, look at that. Triggered in actually over at 37.50 right there, and there was a little gap up. The open was 38, right? So 50 cents higher than the actual trigger price. And as you know, what we do in that case is, what I like to do anyway, is you just add the difference to the target, right? So you have the original target, 39.50. Since you had to pay up on that gap an extra 50 cents, then we compensate, and I call that the compensation target. And so that way, I mean, essentially you get the same percent gain that you would have if you got filled right at the trigger price. So you can see here, I mean, I've talked to a few members over the years that say that they like to set a limit order at the trigger price, and sometimes that works, right? You set a limit order right at the trigger price. But too many times I've seen stocks, gap up a little bit and then kind of take off and never look back, and then you wonder why you were sweating 50 cents, or sometimes even more. So some of these high-powered stocks, I mean, they can gap up over the trigger and then just take off and never look back. And so, we don't sweat the small stuff is what we always say, but the way to compensate for the difference, because stocks are really gappy nowadays, especially they like to open, above or below the previous day's close a lot. And something like this, especially being an ETF, you can see there's gaps all over the place here, right? This is actually an example. Like just a few days back, what day was that? Friday, you had that big gap up, and it didn't really do anything, but then it sort of took off from there this week. And so that's why we say don't sweat the small stuff when it comes to getting in on a little bit of a gap up. But anyway, long story short, what this is showing you is that the price of coffee's going up, right? Along with everything else. I mean, I'm sure everybody's heard lumber's going crazy, and corn is all the actual commodities have really gone up a lot, which typically that's a harbinger of inflation. And so Jerome Powell is going to come on today and say that, he's not worried about inflation, that it's a temporary, transitory bump in inflation, and the Fed like to pretend that there's no inflation, even though everyone sees it with all the stuff that they buy on a normal basis. And I don't know. I don't want to get into a discussion on inflation, but right now, with all these commodities going absolutely ballistic, um, it's almost guaranteed that you're going to see some inflation down the road if you haven't already. So I see it all. I see it at the grocery store, obviously, and you see it with all sorts of stuff. But thank goodness I'm not building anything out of wood right now. So JO looking pretty good as of, and this is funny because yeah, this was the one that I was real hesitant on, and of course, it's worked out pretty well. So, um, as of the close yesterday, it was up almost 11% and basically flat so far today. So we'll see what happens. So yeah, I mean through the target. Make sure I got the trailing stops. The trailing stop is at 38.75 as of. Okay, I knew something didn't look right here. So that trailing stop, let me move that up a little bit here. It was at 38.25 a couple of days ago, and then there was a ratchet higher after the update that ran last night. So let me put that on here so I have it. Yeah, these eventually I'm gonna start marking up. Maybe this next cycle I'll get brave and start marking up the new stock charts and then I can finally ditch these old ones because they're not doing a whole lot for me. But you see how easy that is, right? That was easy. It's not quite that easy on the stock charts platform, like over here, right? If I coming over here, it's a little bit trickier. A little bit trickier to mark stuff up. So I had to find it. There we go. Annotations, right? So you open up the annotations and um, I would draw like a little rectangle and then click some stuff to shade it in or whatever, and then it's going to be a little bit trickier. So basically, I've been working with these free stock charts for 10 years or something crazy like that, but maybe not quite that long, but many, many years. And boy, they're just so easy to mark up. So Anyhow, I would expect, yeah, now that this is, it's kind of going parabolic here. Speaking of which, you can see, well, you can't actually see it there, but if you're logged in looking at the Open Trades page, you can see that there is a parabolic stop on this, a P stop at 40.85. And so basically what happens is when you get sort of like a parabolic move like we just saw here, right? Like that's basically, I guess, what you consider a parabolic move on something like this, then that P stop can kick in, and essentially what that's doing for you, if you want to use it, it's sort of like the system only closes an open position if it hits the trailing stop, right? But when a parabolic stop kicks in, it's typically right below the previous day's price action, and that is an optional level for you to set a stop to just lock in the profits. So 40.85 is the P stop. There we go. Basically, the P stop kicks in. You can read the exact description of this in the on the strategies page. It explains everything. But basically, the P stop kicks in when price has an unsustainable run up and it gets extremely overbought, and that the parabolic stop can be used to basically, squeeze out everything, without letting it, come back down and correct whatever. So if this thing continues to go higher, like the P stop will typically move up under the previous day's low. So we'll see what happens with that. But yeah, so I mean, this worked out pretty well, and quite frankly, being up in the double digits here, it seems like a pretty good spot to start, trailing that stop up. Um, this will probably move. The actual trailing stop will probably slide up, to the area of the actual target here pretty soon. And so the trailing stop is allowing enough distance for the price to, have a normal sort of pullback or correction and not get knocked out, whereas the P stop is trying to squeeze everything, as much of the profit out of it as possible. So, and here's the thing, it would be possible to have, if somebody had, um, if wanted to split this into three positions or whatever, you'd sell one at the target, and you could have one third. Yeah, one third of it at the target. You could have one third with the regular trailing stop. Well, actually, if you sold a third at the target, then you'd be riding two-thirds of the position with the trailing stop, and if you wanted to, you could protect a third of it at the P stop. And so any way you slice it is going to work out pretty well. So anyhow, that's that, looking pretty good, other than the fact that if the price of your raw commodity coffee goes up, then guess what? As I'm sitting here drinking, I always make my coffee at home because I drink a lot, but yeah, coffee is one of those weird things. When you go to the store, you see some of coffee's like crazy expensive, and then other coffees, very inexpensive. I see buy one get one free all the time. So anyway, yep, there's your price of coffee going up along with everything else. All right, so far so good. The first three we looked at have been open for a little bit of period of time and have all been doing really good, double digits. All right, so next up we have Cyrex, which is relative newcomer to the list here. Looks like I had a couple of marks over here. It's kind of interesting, actually. Like for whatever reason, I don't know if this was even pending back here when it broke this first trend line, but it's a pretty decent looking chart. So Triggered in over here, which is kind of nice. I think I had this extended over. So it basically triggered in when it broke out of this sort of consolidation here. Broke in out of this sideways consolidation to the upside. And you can see it's still just kind of hanging around here. So initial stop down here below the lows of, basically the lows of this pattern right here. Let's see, trailing stop 47.80. Yeah, that's the initial stop is still in basically the same spot that it started out at. So the target on this is, target's going to be 59. Let's see if I can get that. It's going to be right about there. Let's see, where's 59? Right there. Close enough. I might as well put that on here while I'm thinking about it. A lot of times I don't put the target on immediately. I kind of wait for a few days to go by. So there we go. Target on this is 59. So the trigger being 54 here, and it actually triggered in officially would have triggered in here at the open. So that was 55.32. This is a pretty volatile stock. And you can see what I'm talking about, the gap up there. So let's see, open 55.32, so that's $1.32. So we're talking 60.32 is the actual target. I should say the compensation target. So, I mean, the target in the system is it is what it is, but we know that the way to compensate for that gap up, so the C target is $1.32. Make sure I got that right. Yeah, 55.32. And you can see in the big sort of scheme of things or whatever, it's not. I mean, it's not really that big of a deal, right? This is a pretty volatile stock. Look at the ranges on some of these days back here. These ranges are significant. like just take this day here. The high was 63.72 and the low was 55.79. And that was this day here that didn't even really do anything. And so it wasn't really, it was up and it was down. And so you can see that, a lot of these days, pretty significant ranges. The ranges have tightened up a little bit recently as opposed to back over here. So these are huge ranges here. And so anyway, I guess the point of that is that this $1.32 or whatever on an extremely volatile stock like this with big ranges doesn't really amount to much, doesn't make that much of a difference. And so like even triggering in in the targets, no big deal there. So no big deal. And it's basically trading right about the same level now as where it triggered in. So looking pretty good, I might add. I mean, yeah, it could pull back a little bit there, but I sort of like the way that the stop is right down below that kind of low there, right before it came back up. And so, I mean, it's hard to. It could chop around. It did spend a lot of time going sideways, so there's just no telling. But it's looking okay here. If we get some forward progress, then I would expect this trailing stop to come up under these lows pretty quickly. So that trailing stop will move up pretty quickly if and when we get some forward progress to the upside. It's basically just going to stick there right now if it decides to come down and back into this range. So anyway, looking pretty good, quite frankly. And last but not least is this MJ ETF, which I also think looks pretty good here. Pretty decent little pattern there. You can see that I think I had this trend line drawn a little bit differently, but when I was updating this last night, I realized that that is a pretty ideal trend line, right? I mean, that's a good looking trend line right there. 3 touch points right there. And so basically, it triggered in right when it broke that trend line, and here it is now. It's kind of going. So they do that sometimes. They break the trend line like that and kind of go sideways. So not looking too bad here. This has only been open obviously for a day. So 426. 426 was the day that it triggered in, or triggered, yeah, closed above the trigger, I should say. And then so yesterday morning, a little bit of a gap up, no huge big deal. A little bit of a gap up, and then of course, oh, see how finicky this can be? Oh well, I'll fix that later. Anyway, let's see. I'll just put the regular target on here, 2270. That's just right up here. The idea here is that and we talked about, oh, back over here I talked about this looking pretty good as like a change in trend, but it wasn't a change in trend back there. It had sort of one more. They do that sometimes. Sometimes you get a pullback and then a V bottom, but other times when you get a pullback that has a nice long duration like this, it tends to be more powerful when you get a change in trend up here. So anyway, I think it looks pretty good. So there's the target, 2270. Big scheme of things. Big scheme of things. I mean, if we're getting, look at this craziness back over here. Wow. And this is an ETF too, by the way. So it's kind of nice. A little bit, I won't say, well, there's a little bit less volatility than an individual stock. Yeah, I will say that. So I would expect it to have a little bit less volatility, but so there you go. Target totally doable. So the big question here, it's not really the question, but the big thing here is, okay, was this like the low of the swing pattern? Is this going to turn out to be the low of the swing pattern? And are we getting, a valid change in trend here? And, everything about the chart, the probabilities say, hey, there's a pretty decent probability that that um that we're getting like a change in trend here. Now, if I had my chart set up with all the indicators and that, you could probably see like the MACD and the stochastics and all that good stuff. Basically like bottoming out and turning up right here. So I'm sure there's, all the indicators are kind of confirming this. That's no guarantee, obviously, right? Sometimes you get a change in trend where everything lines up, and then for whatever reason it just fails. But this is actually looking pretty darn good here. So I'm liking the look of this one. And the funny thing is, I wanted to look at something. I wanted to look at Boeing this morning because Boeing was on the pending list, right? And Boeing was on the pending list, and it was gonna trigger in today, except for I realized that they're releasing earnings this morning, right? So um, it would not have triggered in. It would not have actually triggered in because I forget what the trigger price was, but you can see how it gapped down and pushed down. So um, so there's hardly anything on the pending list right now. You can go over and look. I think there might be like one stock, and so Jeffrey asked me. He's like, are you picking anything up that looks good? And I was like, well, he said because the scans that populate the pending trades list are not really picking up on anything, and that's probably a function of, well, it's a function of several things. One is that the market's still, market hasn't really had a pullback, so to speak. And even though some individual stocks have, gone their own ways, nothing is just like set up properly. So anyway, there's like one pending stock, and of course this was on the list. And earnings season kind of throws a monkey wrench into everything because just like this was potentially going to trigger in, and I said, well, we don't want in the event that the price reacted positive to the earnings, it would have had a big pop up here, and so buying around earnings, not a good idea, and so we had to ditch that one. But anyway, so far so good with everything else, though, right? So we've got the ones that have been open for a while, and like I said, this one's going to get closed tonight, or actually, I'm sorry, tonight. This one's going to get closed, tonight, using the open price today, since they're releasing earnings after the bell, and then everything else looking halfway decent, and this MJ, which is basically like brand new, looking pretty good. So. Um, we're only going to have 4 open swing trades as of tomorrow, and this one locked in. And so yeah, so far so good. Everything going well, and it's kind of weird. If you look at an hourly chart of the S&P, see, I can do that over here now. It looks pretty good. See, 60 minutes. Real quick before I wrap this up, look at how it's just been range bound, right? Let's see. What day is this? 423, and today's 428. So if you just kind of go back to to like right about here, right where I have my little cursor thing. 423. When was that? Let me look at my calendar. That was that was last Friday. All right, so basically you can just see that this is an hourly chart, right? And so you can see that the price is just kind of grinding sideways, not wanting to go anywhere. And so in theory, today being Fed day and all, going to break it out of that range, hopefully, one way or the other. Because these really tight, boring, non-directional ranges are kind of they're not really doing much. Um, it's just boring, right? We need some directional movement up or down. So really close to a breakout. It's going to be so interesting to see if we can hit 4,200 today. But anyway, it is what it is. I hate to think that the summer doldrums are here already, but there's been a few days here. The other crazy thing is that, these down days, everybody, it seems like everyone got in a tizzy when you get a couple little down days or whatever. And I mean, it's absolutely nothing. We haven't seen a real dip since, I don't even know if I classify this as a dip. Now, it might have been 3% or whatever, which I guess is a dip, but I mean, back over here, it seemed like everyone was getting worked up over 1%, 2% off the all-time highs. So I don't know what's going to happen the next time we get an actual correction of some sort. Seems like it's long overdue, but then again, a lot of time can go by between corrections. So what the market needs is a catalyst for something, and today has the potential to be a catalyst, right? Today, tomorrow, or the next day, between the Fed meeting, whatever Powell says, and Biden unveiling his plan tonight, we have the potential for some volatility. So, actually looking forward to some volatility. I hate boring markets. But anyway, so that's that. We'll see what happens, and thanks for tuning in. I will see you guys back here, same place, same time next week.